All right, am I working? What's up, everybody? Give me a heads up if you can hear me and see me and feel me. Madden, I come out in a dime package. Netflix, Faboots, huh? Doing nothing. I didn't even realize Netflix was off the highs. I thought this thing was just continuing to rip higher. So what's it, Microsoft too? No, Microsoft's still going. I didn't realize Netflix came off a little bit recently. Let me get some of this crap off of here. Everything else on. Get this off. There's too much going on. The daily. So we good? Is it going through on YouTube? It is, right? I could X this out. Wonderful, wonderful. All right. Let me mute a couple things. We'll get cracking. I thought I wouldn't have much to really talk about, being that we're right on the right into earnings season here. But a few things I wanted to share with you guys. Hold on. Let me mute it. Mute. NBC word. Mute. All right. So the way I'm going to do it, because a lot of people watch it on recording, I'll kind of smush everything early on into the beginning, and then we can coagulate a bit and talk amongst each other. But let me just run through a few things that I wanted to, even more so for STEAMROom members, kind of give them a heads up on. All right. First off, and you guys know I'm a healthy reality check for a lot of you guys, including myself. All right. I think it's a good time to remind ourselves, especially if you've been dabbling in these small caps, more speculative names, but I guess in general, across the board, it's been really strong. Okay. We may not want to hear this and acknowledge it, but a lot of this, especially the last few weeks, is not about us or our new system, or we found God in our trading, or any of that other nonsense that you're likely going to see all over Twitter or any social media. And it's the God's honest truth, right? A lot of people think they found it, or possibly have leaped the final hurdle of the game of trading, when things get as easy as they've been the last few weeks. Okay. And not to take anything away from anybody who's been making money, because if one thing, and a very important thing that we all have done well, if you have been finding success, is plain and simple, you've been long in a strong, broad, a lot of participation bull move. Okay. And that's saying a lot, because as you know, when we look at it week in, week out, there are plenty out there who are not, right? Are on the other side, shorting or in hefty cash positions because they've doubted a lot of the trend we've seen recently. But at the same time, while we should pat ourselves on the back for acknowledging the price action and the signals and being long in this bull move, we also have to slap ourselves with a reality check that it's not us or the guru you may be following, who's a great stock picker and has picked the last 7 straight. It's been insane out there, right? It's been outside. I mean, it's been, you know how you know when it's been pretty good when every sell ticket, I always call them sell tickets. That's showing my age, but every sell order you put in ends up being the wrong move, right? Every trade, everything you sold is higher than where you sold it, and you kind of regret everything you traded. Okay, so just I think it's important, but like I said, it shouldn't take a whole lot away from just the simple point that you had the ability to acknowledge that you should be long and participated and took advantage of that. Okay, because I think it's really important. So I'm not a complete wet blanket here. Okay, but that being said, that's kind of, I guess it's a good segue into what I wanted to talk about, especially again for STEAMROOM members who may not have been around today. I did post a little brief note last night in market updates, a little late, around 9 o'clock ish. I don't know if you guys got a chance to read it. Really short, but for anybody who's a STEAMROOM member new to the STEAMROOM, market updates, the channel of market updates, that's a lot of times what you're seeing on the screen here. It's kind of where I post everything I look at that I find interesting, or indicators that we talk about, that we follow. You'll find it all there, and as well as sometimes I'll post an update if I have something on my mind that really I didn't spend enough time talking about. We didn't have a webinar or that sort of thing. Okay, but I kind of touched on it late last night, and I at the same time I don't want you guys to think I'm talking out of two sides of my mouth. What I'm doing here, I did some selling right this week and more today. Okay. And a lot of times when you hear that word sell, you just instantly think that somebody is bearish, right? It goes back to either being bullish or bearish. There's no in between. But the reason why I did a little more selling this week than I thought I would, because I really wasn't expecting to do a whole lot this week, being that it's an OPEX week, earnings week, CPI. You had a lot of noise going on. There are, to state the obvious, there are some pockets that you're starting to see a bit of a frenzy out there, right? We talked about a lot of these small caps. Again, social media is a great barometer. You're getting that same sentiment that you kind of saw a little bit of in 2021. I don't think it's to that extent, okay? But what you're starting to see now is not even these niche names and niche groups that are strong and seeing aggressive buying and rallying. You're starting to see the crap of the crap even start to participate here, okay? And that's not unusual, right? When you have a strong market, you're entering earnings season, and it's an OPEX week, okay? A lot of these names have been aggressively shorted for not weeks, months, years, okay? And when you start to get a squeeze going in a lot of these things, and you're in an OPEX week, a lot of these short positions that are hedging via the option market, they need to replace those hedges, right? And that's call buying, okay? So we're seeing a lot of July replacement in many of these names, right? Names that really there's no reason for them to be bought up outside of just speculation and short squeeze, okay? And these names have been shorted, crowded shorts for a long time. So they can certainly overshoot. We've seen them overshoot many times, okay? But, I don't have that much faith in my skills to pick the exact day, week, month that these things are going to top out, or there's going to be some sort of aggressive reversal, and I have the ability to get out of everything I wanted to get out of that particular day, right? For me, again, each and every one of us is different. For me, I have to sell into strength. Otherwise, I find that I can't get out. You know what I mean? It ends up, these reversals happen so fast that, you lose a bulk of the profits on these particular trades. So a lot of these more speculative names that I've been trading, and as you guys know, I've been kind of flipping a lot of these things of more recent anyhow. That's kind of been a little more of a conservative approach I started taking. But instead of using those funds to find something else to get long, I've been raising some cash from that pile. Okay. The other thing that may surprise some of you, but I talked about it during the week this week, is I sold half my Soxal position, right? So again, just to catch everybody up, again, it's not important, but just so you're not lost in the conversation, I own TNA, small caps, and I own SOXO, which I bought probably a week or so, maybe 2 weeks before the TNA, okay? And those are positions that I wanted to trade around, so it kind of takes away from the FOMO. I'm involved, I'm long, I'm participating, and I know I don't necessarily have to chase, right, to feel like I'm missing out on things. The reason I sold Soxal, I mentioned late last week to STEAMROOM members, I was considering selling Soxal. It was at the point now in that trade where I was going to sell it and possibly roll into SMH calls with some time, right? So I still wanted some semi exposure, but I just wanted to take some of that risk off the table, right? That principal risk. I didn't do that part yet, right? So I sold the Soxal. I have half that position left, and I haven't rolled into anything else. And again, one of the reasons why I did it, it's not to say the semis are as hot or they concern me as much as some of the more speculative stuff out there, right? I still think if this is a bull trend that has further to go, the semis are going to be a part of it, okay? But we can certainly see some rotation, some selling, especially if we get a highly correlated rinse in the indexes. And one of the things that had me a little bit uneasy, and being that I had some decent profits in it, is, let me see, I have it here somewhere. I could get to it quick. I don't want to hop around too much. This morning, where is it? Hold on. Oh, here it is. Oh, I think I posted it here. All right, so this chart to the right, and if you remember, we talked about this as well. This is from Goldman Prime, and this is fund exposure. And the right side of this chart is showing you set exposure to the semiconductors, the semis. That's in the red maroonish line, and software, the blue, right? So you can see how the exposure, as these funds have covered shorts and have put some longs back on in places, the semis is one of those pockets that they've been getting long, okay? So you can see they've added some length here. And again, I don't want to make too big of a deal out of that, but I think that was just something to give me that extra push to take some of that risk off the table. And now, I tell you what makes me feel even better about some of the moves I made now is now I kind of refreshed, right? And I have some decent ammo to fire if, not even if we get a market pullback, but if we get some rotation in this market, right? And that's what I think there's a higher probability of, even if we don't get much of any index pullback, right? If it's just a couple percentage points. But I think at the least we get some aggressive rotation. And we've seen it time and time again. If you remember some of these smaller cap names, they really got hot. The nuclear names at the time were on fire, the quantum names. And then if you remember, I think it was like a week or so later, there was a reversal and they kind of had a healthy rinse, right? So that's kind of what I'm expecting, or what I'm looking forward to in a lot of these spots. And now at the same time, if any of these pockets that I like, and they do see some sort of rinse, now I got some decent ammo to fire and look for some re-entries, right? And stuff like that. Also, the semis, like I said, and I'll end it here and then we'll go into the signals because, again, you guys don't need to focus on what I'm doing, but I'm just kind of explaining my rationale here. The the semis, while they are a leader and they should participate no matter what, if you have a bull trend, I'm kind of looking until we get some sort of rinse. I'm kind of looking elsewhere, right? Like the small caps have been a big laggard. They haven't participated yet, right? So that's why I'm giving kind of a longer leash and more patience to. I'm more eager to add into any sort of pullback there, right? Because they really haven't had their time yet. And by selling some of my semi exposure, it gives me the ability as we go through earnings here to possibly look at maybe another pocket of the market that I find more interesting, software being one of them, right? You certainly have some extreme underperformance there, and that's what kind of this chart is showing you, right? A big underperformance there. So those are kind of the things I'm weighing here as we kind of get through the next few weeks of earnings. And that's perfectly said. Earnings are another thing, right? Who knows with tariffs and exposure to China, who knows what some of these earnings reactions look like in some of these names. Taiwan Semi had a positive reaction. That thing's a stud. But you had a name like ASML, which had the opposite reaction, right? So we'll see. We'll kind of get some good information from the price action and the reaction to some of these earnings, especially that some of the, these names have had healthy runs. Okay. So that's where I'm at. Again, I sold a lot of the smaller names. The majority of names I've sold even earlier in the week or yesterday are higher, especially today. But again, I can't wait for a reversal. And all of a sudden, I'm looking to sell, 4 or 5 different positions into some heavy weakness that already probably started before the market even opened. Okay, so that's something to consider. A lot of times we look at and we see our P&L in the account continue to go higher, and you think you can get out in the nick of time before these things reverse. But a lot of times, where you were thinking of probably taking profit, they may rally higher, but more than likely they end up reversing back to where you were looking to take profit, and you end up selling there anyway, if you're lucky. All right. Again, at least for me. All right. So that being said, and that's kind of what I wanted to talk about in the market as a whole in regards to today's webinar, is that while this market, you feel, again, not euphoric, but there's certainly, if you got kind of this frenzy in certain areas, okay, the overall market and overall positioning that's not the case. Okay. So when you start to see these overheated pockets, right, like I mentioned a little bit ago, the higher probability that the end up result is you get some sort of rotation. Okay. And a lot of times you don't even get much of a pullback in the major indexes because of that rotation, right? So they sell semis for a couple of days this week, and they're buying the banks, right? They're buying healthcare. Then they're selling the banks. They're selling healthcare possibly for a day or two, and they're buying software names, and the small caps are leading, right? So you get this kind of aggressive rotation, and while that's going on, a lot of these overheated pockets, they lose some of that momentum. And I think that's the thing to keep an eye on if you're in these names or aggressively long these names, is when they start to lose momentum, how aggressive it ends up being, right? Is it just one particular sector? Is it the whole momentum sector as a whole, right? All these speculative names, are they trading with high correlation? Because it happens quick, right? I'll give you an example. Here's like, and again, I get the rebuttal constantly, right? And just like this perma bears, they're perma bulls, right? They always like to talk the name they like, or they talk their book. Okay, honestly, I don't care about any of that. I'm just talking about if they're trades, right? You're trading, right? We're not talking about investments here. And like Aklo, you had this kind of this frenzy run up into these names, if you remember. And it wasn't just Aklo, it was the FMR, it was the NNE, the LEU, the whole enchilada. Okay. And you were seeing on social media, just people just plowing into these things and talking the story. All these things, the data centers, Trump, blah, blah. And we get it. There's a sexy story there. That's why these names have been so strong and have been seeing this type of buying. Okay. But that doesn't mean that there's not going to be some shakeout at the least along the way. And that's what I'm getting at here, right? So you had kind of this, basically gave back the whole move, right? Gave back the whole move. So if you had played Oclo and you had a decent entry on it and you caught this strong move and it was just a trade, the last thing you want to do is give back the whole entire thing. Right? Again, even if you love Oclo longer term, if it's just a trade, that trade is busted. Okay? And so that's what I'm getting at. That's what I'm getting at. Or even the quantum names, right? And again, a lot of them I think are higher, I think. But you had this kind of RGTI, Qbert, right? Every little, any name, any company, spec company with the word quantum anywhere near it was being bought up and touted on social media. All right? So you had this crazy frenzy type run. People thought it never was going to end. All right? And then they bust it up. And then they do enough of busting to where if these names do have enough of a story and enough of an interest longer term, eventually they see buying again. But look at this agony from a trading perspective that you would have to deal with if you ignored kind of the frenzy that was going on. Right? So you never know when this comes to an end. Right? You'll see people were shorting. I remember RGTI here. They were shorting it here. They were shorting it here. They were shorting it here. Right? Nobody knows when it comes to an end, but when it comes to an end, it comes to an end abruptly. Right? You get kind of up 5 and then reversal down 8 type of move. So it's just something to acknowledge early, right? Because when it happens, a lot of times it's too late to really start worrying about it. Okay. And there are many things you can do, right? Now is the best time to consider it while these things are still going higher, right? While things you're selling continue to make new highs, right? You can buy puts. You can buy, there's a number of things you can do right now. That won't be the case once the reversal happens. Okay. And again, this can last for another few weeks, can last a month. I have no idea. But when you start to see this sloppy buying, when you start to see people on social media touting themselves, oh, I told you the story. You know what I mean? When you start to see that, that's usually a sign that you need to start worrying about these things. Okay. So that being said, for the rest of the market as a whole, we're not seeing anything that's screaming sell signals. And, a lot of the things we've been keeping an eye on, this is a tough week because it's OPEX week. So you get kind of these funky readings on some of these signals on an intraday basis. But as a whole here, and I kind of wanted to just run through a couple of these things. On the systematic flow side, according to the UBS model, and they're pretty much line up with the others, you still got 2 weeks of buying, right? So you got a couple of weeks here of CTA, positive CTA flow before they kind of get tapped out, okay? And that's kind of what this chart is showing here. You got another 2 weeks of a CTA bid before kind of things get toppy there. You kind of lose that bid. All right. Here are some of the other things. Hedge fund exposure in single names. Right? Still no chase. Okay. That was one thing we were worried about. If you remember early on in the rally, you got kind of a little bit of a sign that they may be looking to chase here, but they've done complete opposite. Now, again, in certain areas of the market, they have gotten long, but they're hedge funds. They've shorted other areas to kind of offset it, right? Net, There's no sort of exuberance. There's no hedge fund chase that everybody was talking about was already happening. It hasn't happened yet. Okay, so that remains bullish, right? Constructive. Financial conditions have been easy peasy throughout this move, right? Market continued to go higher. Financial conditions continued to loosen. I mean, we got to a point where a lot of times you see financial conditions here kind of hit a floor, they bottom, and gradually start to tighten, right? Now, if the market continues to rally and in the background, financial conditions are tightening, a lot of times that can be an early caution signal that some sort of correction is coming, right? We talked about that. But again, that's something to keep an eye on, and possibly we need to worry about it going into August. But as of right now, not any major concern. Liquidity, right? And again, a lot of people talking about it. Bitcoin finally busted out. It's been nothing but up, right, on a lot of these liquidity indicators. You're starting to see a little bend on some of these look forward, look ahead indicators. Okay. Again, don't want to make a big deal out of it yet, but you start to lose possibly some of this liquidity force, and it may not be detrimental to the overall market. It may just result in chop, but these smaller cap speculative names are definitely going to be affected. I can promise you that, right? So, yeah, something to keep an eye on. You can see a little bit of bend, a little breach of that trend line here on this M2 indicator. This is Sharpies. So no warning signal out of Sharpies yet. You can see kind of trim there long, slightly short, but dead neutral right now. And I think the more important takeaway from Sharpies, commercial hedgers, are the reason why they're neutral is because hedge funds and small specs aren't long in a major way. Okay, I think hedge funds might still be short, and small specs have been just adding longs the last week or two. Okay, so when that positioning starts to change, what you'll see commercial hedges start to aggressively slap on hedges again. So we haven't seen that. Okay, but interesting what they've been doing the last couple of weeks is as VIX has been selling here, right? They've been utilizing the VIX weakness to add some VIX exposure, right? Again, these guys aren't what a lot of riffraff out there want them to be. They're not going to add VIX and then the following Monday you get a VIX explosion to the upside, right? What they have a tendency of doing is accumulating VIX when nobody wants it, right? VIX exposure. And then when everybody wants it, they already have it, right? So that's something to keep an eye on here, right? Even though they're not hedged in the equity indexes, the futures, they are starting to add some VIX exposure on. Now, that's normal for them. They're hedgers. As you can see, they're usually long VIX, right? They're usually long volatility. That's their job, okay? But they're coming from slightly net short, which was a really bullish signal, to now, little by little, starting to add long exposure, okay? And again, it could simply mean that you get a 1-2 day volatility event, right? That's not the end of the world. And you can certainly see that happen, especially in some of these pockets of the market that are a bit overheated. You get this kind of reversal that lasts a couple of days. Think of like DeepSeek. Remember the DeepSeek news? That was the end of the world. How long did that last? 2-3 days tops? So something like that. I showed that already. Okay, let's go to the next row here quickly. A lot of talk about the BOVA Fund Manager Survey. A lot of professionals follow it, look forward to it. I certainly do. Comes out every month. It's kind of a survey for fund managers globally, how they feel about risk assets, everything basically. So again, if you are a perma bear, you can certainly look at this and stress some concern or worry. But net big picture wise, it paints a different picture, right? And let me show you how. The biggest 3-month rise in risk appetite on record. Okay. A lot of times you see that again, it can lead to a pause. It can lead to rotation out of some of the stuff that was crowded into. Okay. But so the early on in some of the strongest bull markets rallies, you'll see something like this occur, right? That's because nobody was long when the market turned, right? Everybody was on the other side. That's what happened. So you get this aggressive swing. Look, the chart tells you right there, right? Risk appetite literally to an extreme to the downside and whoop, flips to the upside. Okay. So that's what a lot of perma bears are pointing out. But some of the other things that had me kind of feeling really bullish into the April lows was stuff like this. Okay. Investor sentiment amongst those surveys at a 5-month high. Yeah, here's your 5-month high. All right. Here's where it was in into the lows of April. Right? An extreme low measure, you've seen at major lows in the market. So you've had a bounce. Again, nothing to any major extreme. Here's another one that bears are hanging their hat on. Cash, okay, which there was a bump up in cash into the April correction. You see kind of a drop in cash. And according to HeartNet's cash level indicator, that's technically a sell signal. But again, from my experience, a lot of times it can easily lead to rotation as opposed to the end of some sort of trend, right? Okay, it can lead to an end of a trend, but it doesn't always lead to an end of a trend, is what I'm saying. Most crowded trade. Okay, now if you remember, probably made a lot of you people nauseous if you back, what was it, a year ago or so? Mag 7 was the crowded trade, right? Remember? Everybody, Mag 7, just buy Mag 7. That's all anybody would talk about. And it was kind of on this most crowded trade survey for multiple months. Okay. That has flipped now from, it went to long gold, which again, that's not risk on to me. You know what I mean? Long gold is certainly not risk on. And now it's short dollar, right? For obvious reasons. It's the talk of the town right now. Okay. So you have extreme short positioning in the US dollar, which could likely lead to at least some stability, if not a squeeze, and maybe reshapes kind of the front on equities, possibly. But you're not seeing any long NASDAQ, long Mag 7, things you normally would see if things are getting a little bit overheated in equities. And this is the last one I took. This is investors that are taking higher than normal risk, right? So when people are giddy, they're willing to take a lot more risk, right? That's usually how it goes. And you can see a nice bump from where we were. Okay, but zero is the mark there, right? Zero is the mark in the past where a lot of times at least it would lead to some sort of correction, some sort of cooling down period. We're closer to that zero mark, but we got some room. We got some room there. There's another one from Sentiment Trader that I follow. Sentiment Cycle kind of gives you an idea of where you get extreme bearish sentiment and how that cycle plays out, into bullish sentiment. Now, this is something I look at in every correction, but it's not the best topping signal, right? But I do pay attention to it because a lot of times when you get a full retrace of this, you get some sort of pause, rotation, or maybe even some sort of drawdown or rinse. Okay. If you look back on a chart on this here, and you can see the SPX on top of it, really hard to see like some of these consolidation periods or drawdowns. But a lot of times when you breach this red line, you're pretty close to some sort of breather chop, if not some major rotation. Okay. So again, that's something to keep an eye on here as we go into August. If we don't get a breather ahead of that. What else did I bring for you guys? Here's some of the shorter term indicators. This is something that's got me feeling a little better. Short-term sentiment was really hot. Market was kind of grinding through that. And even if the indexes weren't grinding through it, a lot of the speculation certainly was in names. You got up as high as almost 90 here at the highs. You've had a nice rinse. And, a lot of retail traders aren't paying attention to it, but there's certain groups out there like the banks that were really hot and needed to breathe. They, primarily a lot of them have started to breathe. So as we go through earnings, you may see more and more of that. But at the same time, the market has done a really good job of cooling off a lot of the stuff on short-term timeframes that needed to be cooling off. Okay. Now, why does that make me feel bullish? Doesn't mean the market can't sell off here. But if the market does see a little bit of selling, you're going to be running into bull signals before you know it. Right? So that's kind of got me feeling a little better about things on a short-term basis. This is internals and breadth. And if you guys remember, we were looking at this. This was literally, it looked like Satan. It was red all over the place. You couldn't find any white. Forget about green, right? But little by little, the recent chop, now I can't even believe it. There's actually some green starting to show up on here. Again, on shorter term time frames mostly. But you were literally cooked everywhere here. Everywhere. Right? You can still see a little bit of heat, like utilities. You still see a little bit of heat. The industrials, a little bit of heat. But again, we didn't even really sell. Like, look at this market, what it's done. Like, you literally had straight chop sideways here. And just because of some under the hood rotation, it cooled things down nicely. Right? Like, here's the financials. That's a nice, healthy, constructive breather here, right? So we may see more of that. Right? Like, for example, the semis. You may see something like that in the semis. We may be already in the midst of that as we go through earnings. So again, that's what I would be more focused, keeping an eye on here, as opposed to some calamity or something like that, right? Or even just a highly correlated drawdown. Right? We've seen time and time again, it doesn't always have to be that way. We would take that. If you're bullish, you want that high correlation drawdown, right? You get a highly correlated 5% sell-off, and you're going to have a nice reset across the board with a lot of money on the sidelines looking to buy it. Okay, so we'd rather that. But because of all the underexposure out there, the likelihood of that happening is a lot less. What you're more likely to see is rotation, right? And as things start to dip, banks start to dip, that money on the sidelines that doesn't have enough exposure starts to come in, right? So that's what we're more inclined to see here. What else? I showed you guys this, right? So this on the left is Mag 7, okay? And you can see exposure-wise. All right. So you can see going into 2023, nobody wanted anything. Well, no, not nobody, but I'm talking about hedge funds here, right? Funds wanted nothing to do with Mag 7 going into 2023. Any of those names, right? And that quickly flipped, okay? And flipped aggressively to the other side. You had a nice rinse there. Again, Mag 7, Kramer already has come up with a new one. Mag 7 doesn't even exist anymore. But that's what usually happens when you get that extreme. right? When Mag 7 is the most crowded trade, right here, see, long Mag 7 for that big of a stretch usually gets blown up. Usually gets blown up. Ooh, where'd I go? Where am I? Okay, so that's Mag 7 here. You've been seeing some buying in those names. But again, this is the more interesting one here to see how, how this plays out and how we could possibly take advantage of it. There's been a focus on semis, and I mean, almost neglected is the word, software names. Now, people, again, you guys know me. I'm no tech guru, okay, in technology, so I don't have a clue. Now, there are supposedly legitimate reasons for this, AI related, okay? So I get it, all right? But the reason I'm not talking about any of those reasons is that's what you're seeing here on this exposure chart, okay? The reason nobody's in software is the reasons you're talking about. Right? It'd be different if everybody was fully loaded in software and you see reasons that could be potentially a problem. But you see the opposite of that now, right? You see everybody positioned for those negative reasons in software. If any of that negativity goes away, you got a lot of money that needs to get long, right? Now, again, just to give you an idea of if you catch this right and it happens to work, what kind of payday it is, here are the semis going into, and we've talked about this a million times, but here are the semis and software going into 2023. Okay, going into 2023, nobody wanted to own the semis because they were cyclical, right? They're more tied to the economy, and everybody was looking for a recession in 2023. So what they rather have owned is software, because software tends to do better in a slowdown. Okay, so all the reasons were there to not be long the semis, but look what's happened. Okay, and when that happens, this happens. And go look at an NVIDIA going into 2023. God forbid you had that entry, right? Or any Avgo, any of those names. So that's the type of setup you got here in software. It's just not as clean cut as the semi setup. Like semis, you know where to look, you know what to get long. Software, you got different types of software names, and it makes things a little bit difficult. Like you look at the price action in software stocks, some look great, some look like dog shit, right? And some are like kind of in the middle. So, but it's definitely something to pay attention to, right? And what I mean by this, especially if you're a STEAMROOM member, you see some accumulation in a software name that looks interesting to you at a decent spot. You know, this could be that final kicker that gives you a push to get long, something like that, right? You have this also on top of seeing some accumulation in the flow, right? It may be something that allows you to hold a position longer, right? Because you're looking for this, you're targeting this to play out in a sense. So it's something to definitely keep an eye on. What else we got here? Oh, and just credit. Again, it's not a big deal, but I even that being said, I wouldn't make it a big deal because of the week we're in this week. It's a real funky week, but you're seeing a little bit of a divergence in credit in comparison to equities. Okay, is it the start of a larger divergence? Maybe, but again, I'm not trying to predict that. If it is, that can be tipping us off to, again, some sort of legit rinse coming our way, right? But just something else to keep an eye on here over the next week or two as we get into August and what seasonally could be some trouble. All right. And this is a credit spread. Again, not really much of a divergence here, kind of flat. And the market's been choppy, so I wouldn't put that that much into it. Right? So, yeah, I think there's two ways to talk about this, right? There's a bunch of ways that this market can be constructive, net, and allow us to kind of sidestep a larger correction, right? You get kind of that aggressive rotation we see a lot of in this market. Instead of a correction, you get this kind of aggressive rotation that gets the job done. You get some sort of sell-off that lasts a week or so, 5%, right? A lot of times that'll get the job done. But if you get this kind of melt-up chase and things get even crazier on the more speculative side of things, right? In names now, you see AMC going ape shit, no pun intended, right? You start to see stuff like that. That's where, for me, I end up getting a lot more concerned, right? Why? Because come mid-August, on top of all this speculation that's going on, you're also going to have systematic funds that are now have a decent amount of supply if things turn. Just in general, people, right, that weren't exposed to equities have been putting on exposure if there's a chase. So these are things just to keep an eye on over the next few weeks as we get into the month of August. But again, there's just so many things going on right now that it's not worth getting too wrapped up into. Let's see how they shake out, right? You have earnings. The earnings reactions, if they're negative, right, it could be bearish price action. And the last thing you're worried about is kind of a melt-up chase that can be a problem, right? It's the opposite. It ends up being an entry that you probably want to look to take advantage of. So I just think we need to pay attention to this stuff over the next few weeks through the heart of earnings season and see how things shake out. Right. You start getting Roaring Kitty back. You know what I'm saying, Pat, right? You start to get the things. Again, already I'm seeing on social media, and it's amazing how it happens, but it's just amazing. It's incredible how it happens. They just fall for the same shit. And I'm not even talking about retail falling, like being stupid, falling for things. Because, retail, some parts of retail are better traders than the pros. I'm talking about, like, you even have the pros who have stayed away from getting wrapped up into kind of this speculative frenzy on social media because it ends up becoming a problem for them. I don't want to mention names, but you guys know what I'm talking about. SPAC related and stuff like that. You guys know what I'm talking about, right? But it never fails. Like, again, there are reputable pros, right? People who know the game, okay, that get wrapped up in pumping crap and speculative stuff. Maybe they truly believe in it, but when you're pumping a $2, $3 stock saying it's going to go to 100 and getting all of the riffraff on social media to buy and get long, that does no good in the long run. You know what I mean? Nothing good comes out of it. Because what happens is they all pile in. You get this run up because of all this buying, right? And then when there's a reversal, listen, do I need to explain it? We saw it in GameStop. We saw it in AMC. We saw it in SPAC names. You know the end result, right? I mean, do we live in some fairyland where we're all going to pile into the same stock? We're all going to get rich together. We're all going to slap each other high fives on our yachts. All of us together having fun. So, and it kind of tarnishes, and then, some people overcome it, but it tarnishes the reputation of legitimate people out there, on the professional side. But anyway, when you start to see that, more importantly, as a signal for us, again, doesn't mean things run out of juice right now, but you're closer to a shakeout than you were before seeing that. That's for sure. Hell yeah, right? Like, that'd be different. If it was us, we'd end up going partners on racehorses than yachts, no doubt. No doubt about that. I have no interest in a boat or a yacht. Give me a couple of stud maidens, and I'll case a Kentucky Derby dream. Anybody have any questions? I'm on the same page. Taking off boondocking the next 2 weeks. Very nice, T. Look at that. You come back, you make some money, and then you go and enjoy yourself. That's the way to do it. But yeah, I think that's a good time for it, T. I think it's a good time for it. Yeah, I'm by no means, and you know, right? Because I'm telling you, I still have TNA, right, exposure. I'm not even thinking about selling any of it, right? If there is any weakness, I'm looking to add more exposure to the small caps. If there's a correction, you know, I have a completely different time frame there. I still have positions that I'm holding, so I'm not like I'm selling everything and raising cash. I have the VOYG. I have the Galaxy that I was down on that has turned green. You know, a lot of the stuff that I told you, what I was doing is every time I sold, I was going position by position. So if I had two names on, I traded them, I sold them. If there were two things out there that I liked, I'd roll into those two. You understand? So I just wasn't putting any additional risk on, but I was still holding on to kind of everything I had. This week it changed where I'm taking risk down, right? So I've been taking risk down. I'm holding less, but I still want to be long. Okay. I'm not trying to get too clever and, oh, I think there's going to be a correction. Let me get out of everything and then get back in. Easier said than done. All right. Easier said than done. If there happens to be a pullback, like I said, a highly correlated pullback, as of right now, I'm looking to buy that. Right? I'm looking to find something to buy. And a lot of the stuff, you know, not the more recent crap that has heated up, but a lot of even the small speculative pockets that have that sexy story, they're likely still going to be appealing. Just you rather after they rinse, right? If you're looking to buy them. You don't want to buy them up here and all of a sudden you get caught in a rinse. That's the last thing you want to do. Yeah. What else is interesting on the speculative side has been, you know, a lot of these material mineral type names, right? That's been a really hot group. Kind of kicking myself in the rear end for not playing a few of them. But, you know, that's an interesting group that kind of cropped up with a rare earth mineral materials. There's been a decent appetite in it. Like you had a couple of these, I think they're uranium plays, but these guys that heated up this week. Look at this. Right? UEC. Oh, but they've, you know, I mean, some of these moves. Have you seen some of these moves? Look at Joby. Remember good old Joby? Look at this. Right? And we had like GJT, who's been bullish Joby since what, $5 in the steam room? I mean, this is a pretty healthy move here now, right? So you get these type of like explosions, and you know, eventually they need to digest that. They need to digest that. Omex, I think I actually played that one and got out of it because it didn't move for me. That's the dollar stock, Omex. Yeah. This is deep dive material play, a deep dive mineral play. Very similar to this, I think. TMC. Right? But you know, some of these spots, these more speculative areas that are kind of under the radar, not anymore, but they were under the radar in a sense. You know, this was kind of the known play, MP. You know, these areas still interest me. Right? Like, in other words, you get some sort of rinse in these speculative arena, you know, you start to see buying show up especially in any new names in this arena, that that's really interesting. Really interesting. Yeah, it's funny that's some of the stuff I left that I'm long. So I'm long Wolf and I'm long Hut. Um, Honestly, they've been disappointments of recent. I own some of these. I own pieces of these from back here. And what I've done a couple of weeks ago, I added to Hut and Wolf, WULF, to add exposure to it. But yeah, they kind of got choppy here, even with Bitcoin running and some of these names. So I'm still holding Hut and Wolf. I got out of this one. This one was nice. I think it's still going higher though, right? Oh no, kind of got choppy here a little. But Cypher, I bought right around here, I think. Yeah, I think right around here. Because this was another one that I didn't play, and I was kind of pissed off at myself. Irene. Again, you got healthy moves here across the board. These are big moves. These are big moves. And I think what you're going to start seeing happen on a lot of these things, you guys know, bust out to new highs, be up 3, and you'll be like, oh my God, it's up 3 again. And then you look back an hour later and it's down, right? They're just more inclined to see selling because people are up so much. People are up so much. And I know a lot of people are bullish, in this name, Irene. Okay, there's a ton of flow in it. I get it. But look, you've seen run-ups and you've seen it cool off after that. Right? They go higher 6 months later, great. All right? But if they're trades, that's the point I'm trying to drive home. Right? If you're trading these things, okay, it's time to start thinking to take profit in some of these things. Okay? It's time to start taking here, because here's what you got to think about. If there is a rinse and they all fell off aggressively together, what does that feel like to you? You know what I mean? What does that feel like to you? If you're in options, I'm telling you right now, it's going to feel really, really bad. Okay? Because those profits are going to disappear so quick, you're not going to know what hit you. Right? Now, if you're in equity in a name like Irene and you own it at 8 and it's 18 now, and you get caught in a reversal, now it's 14. I mean, maybe that's not that big of a deal for you, But these are things you need to think about now. You can't think about it the day that it happens. Right? Especially multiple positions. Especially multiple positions. If it's one stock, yeah, fine. But multiple positions, you can't wait till the last minute. So, and it's the process that kind of reels you in, right? What happens is you start selling things, and every time you sell something, it's higher just immediately after, right? And everything you sell, you feel like a jackass. So the market kind of reels you in to, all right, now I'm not selling. And then that's when you get it up the rear end. Oh, yeah. And forget about K. I'm not even, again, you guys know how I feel about that. I'm not even talking about buying these things up here because that's not even on my mind. Forget about that. All right. These are names that, we've been talking about here on this webinar. You guys have been talking about these names over 100% ago. You can't be looking to buy these up here. I hope not. I hope there's nobody out there thinking about that. I'm talking about if you had the luxury of making money in these things, to be smart about it. Forget about buying them up here. All right? And if you sold, right, and it trades higher, then there's going to be some sort of correction. Whether it may not be tomorrow, may not be next week, whenever it shows up, there's going to be some sort of correction. And you'll get an opportunity. Okay? If it's some GameStop or AMC blow-off top rally, fine. You missed that upside blow-off top, but the stock ends up getting destroyed anyway. So, I think people have too much faith in their trading ability. They think they're going to get out at the exact highs, and they think right after they buy something, it goes straight higher. You got to plan sometimes for the opposite of that. I'm just, a lot of you guys know this already. I'm not saying anything, but yeah, I'm just giving you the reasoning why I kind of lightened up a little more aggressively this week than I even thought I was going to. Being, it was, I thought it was going to be a choppy, dull week this week. Shows you how much I know. But we had the luxury of a lot of momentum in individual names. There was some nice momentum. Nice momentum. I mean, Joby's been incredible. Archer, Madden is in Archer, counting his money here. Look at this. I sold Archer yesterday. That looks like the wrong move. But what am I going to do, They all look pretty good while they're going up. They all look pretty good. So that's the story there. What else did I have to tell you guys? I don't think there was anything else of importance here. You have earnings season. The flow this week, there's been a ton of flow. A lot of you have heard already me talk about this, especially STEAMROOM members. You're seeing, especially the more speculative names, get lit up call-wise, okay? But these names have a lot of exposure already, especially July, So people are rolling those positions. They're adjusting those July positions. Not all of it, but big portions of it, okay? It'll be interesting to see how this action looks like next week without July OPEC. I think, it's not that it's going to tell us a lot because we're going to be in earnings season and that's kind of going to drive things, but you're going to see a difference. I got to believe you're going to see a big difference in the flow in these speculative names. Maybe not all of them, but, the bulk of them. I think the things to pay attention to here, earnings, is if you get kind of these pullback scenarios, these sell the news, or just sell-offs in general, if they're names you like, you may want to give it a couple of days, right? Let the flow kind of clean itself up, slow down a little. But you start to see some buying stir up in these names again off a pullback. That's kind of what you're looking for here. I saw somebody mention this. This was another one. Look at this. This was huge. Look at this. Right? This is a stock that went from whatever it was, pennies. I don't even know if that's legit or it came public or what, but up to 120, came down here. But you guys remember we were talking about it down here. Like you had it form a bottom, and then there was kind of a pickup in action in it. Who the hell? I didn't think it was going to quadruple from there in a couple of weeks. But look at this move. Look at this move. There's so many. Yeah, right? I kind of mentioned that earlier, Pat, that the banks, you had kind of what you needed to see here, right? You had really nice run, right? Even more so in some of the stronger banks than others. But as a group, upside niner, that's kind of where you want to see it consolidate. Maybe a few dips here and there, earnings, right there with it. So you got a little bit of a drawdown here and a quick reset, but that looks constructive to me, right? You can't draw it up any cleaner. So that's what I'm saying. What I think is the higher probability case here, barring something unforeseen, is that you get kind of this rotation under the hood. You get the rotation. Whatever stirs it up, yields are higher, or the dollar's down, the dollar's up. You got the Fed, right? The Fed may be a little more dovish or hawkish or whatever. Earnings, the most important, right? You get a couple tech names that you get sell the news in, right? You get some selling in tech. That money more than likely goes to the banks or the industrials or the small caps, right? Materials, energy, can go anywhere. And that's kind of what we're starting to see. That's just normal earnings season activity too, here in this. All right. So now what you kind of had here was, because of a little bit of pullback on a short-term time frame, financials looking a little more bullish, energy looking a little more bullish, materials looking a little more bullish, right? And you start to see the stuff that's a little bit extended heat up, on a short-term time frame. So you just get this constant moving around that allows things to digest. More importantly, cools off the speculation and keeps kind of sentiment and positioning at bay as well. BBAI. BBAI, again, this is a name that's been littered with action. Down here, like we were saying with a lot of these things, you can make the case here, right? Risk reward wise, aside from the story. Like, I know there are some people that really like the story, they get them excited. I have no idea. It's a spec AI name to me. That's all I know. But it's come a decent way here. See, here's the thing. If you get these spec names to cool off, BBAI is going to cool off with it. You understand? It's going to cool off with it. So that's kind of where I think you're at with a lot of these things. You're going to see them trade together. That's what they're doing right now. Initially they weren't. If you remember, think back, I don't know, a month ago on this webinar or whenever, when we were talking about the action, a lot of these speculative names, right? You had pockets. You had certain pockets, like AI spec names were hot, or the nuke spec names were hot at that particular time, right? Then you had LIDAR or whatever the hell that was, right? And robotics, space stocks, right? So you had pockets of momentum stirring up where we were seeing sweeper activity. Now, it's everything in the speculative arena. It's everything, right? From an open to an AMC to, by the way, here's my little baby. You guys see this thing? Rocket Labs? Look at this thing. Rocket Lab, whatever the name is. Do you know how much action this name caught? Rocket Lab? Okay. The stock is over 50 now. Like, at this point, you're in it. You made money. God bless you. Roll, take some profit, leave a runner, do what you got to do. But what is there? I mean, what are we going to talk about here now, right? Now, at this point, you got your pom-poms out and you're just cheering it on. What else are you going to do here? What else? This thing is, oh my God, big money. This is one of those speculative names that caught some real buying, not just spec action. But they've been buying it for a while now. They've been buying it for a long time now. But it's everything now. It's everything. So that's why kind of my tone has changed a little bit here now, because it's a highly correlated spec case. I guess is the best way to put it. Yeah. Like, everybody thinks they're a guru in these names now. Everybody thinks they're the best stock picker around. They don't realize it's the market that's made them money. You understand? Right? Early on, maybe you found Joby at a 5 or a Rocket Labs in the 20s or whatever. Now it's, it's everything. Right? You're not finding any hidden gems there. They're all hidden gems. Yeah, open. That's all social media is piling into that one, Tobias. Okay? Literally. All of X bought open this week. All of it. Okay? So that's what you're starting to see. Okay? Yeah, I don't know anything about Open's business. I'm not talking about Open's business. What I'm talking about is you got a speculative chase going on right now. Okay? And what usually follows that sooner than later is a rinse. Open may end up going to $50 one day. I have no clue. I'm not Nostradamus. You understand? But what I'm saying is, a lot of times you get this chase where all the riffraff are piling in, chasing these names, thinking they go up every day forever. And what happens? Right? They get hosed. So, I don't know how long it lasts. Maybe it goes to 4 or 5 before it happens. I don't know. But again, for me personally, I'm being honest with you. Okay? Maybe you guys know other traders out there that are better. I don't have that much faith in my trading skills to get out in the nick of time before that reversal shows up. Okay? So I got to sell them into strength. Right? If I like it, first of all, I'm talking about trades here. I'm not talking about investments here. Okay? If you made an investment in Open at 80 cents, hypothetically, okay, it shouldn't be a big deal to you that it's at $1.70 right now if you're looking for 30. You're willing to give back these profits. Okay? You can't complain if Open a month from now is at 60 cents again. That's the way the game works. But if you're in for a trade, that's a different story, right? Hoes in this house. We got hoes in. But yeah, listen, we're all big boys and girls. You know what I mean? Some people need to learn the hard way. You know, some people think the smaller chance or probability that it goes absolutely parabolic, like a GameStop, and then I can get out. You know, so I'm not here to talk anybody out of doing anything. All I do is share things I've learned throughout my career. I'm getting older by the day. And what I'm doing for myself. Not so anybody follows, but people take away what they will and do what they got to do for themselves. But the majority of you know what I'm getting at, right? When I talk about this stuff, the majority of you know. And here's a good example, okay? And again, I'm just giving you my examples. Soon, okay? When I initially bought Soon, okay, it was initially a trade, okay? And like when I bought Soon, I took a nice sized position in Soon. Okay, most of you know this story. Oh, here's Sahil. He knows this story. He was in it with me. Okay, but I'm just giving you an idea of what I had to deal with. Okay, like the end result was, wow, that was a nice score in Soon. But I just want to give you what actually transpired so you know the truth. Okay, I bought Soon here. Okay, it was under $2 and catching sweeper activity at the time. At the time, there was nothing under $500 catching sweeper activity. We were coming out of the bear market. Okay, AI didn't catch fire yet. So I remember we were talking with Sahil specifically, who's right there in the chat. Okay, we got $1 stock that has the word AI in it that's catching sweeper activity right now. Okay, so I'm going to take a shot, buy a nice chunk of equity, right? And when I sell it, I'm going to try to leave some behind because who knows, God forbid AI catches fire. We're talking about in 2023 now, okay? We didn't know AI was going to get as hot as it did, okay? If AI ever catches real fire, you got a little stock, AI related, that's who early buying. Right? They're usually big, they end up nice winners, okay? Again, at the time, it's a piece of garbage, fundamentally. But make a long story short, the stock goes from a buck and change to $5, as you see in this chart. Okay, buck and change to 5. Quite the rip. My trade, I got out of the trunk. Okay, so to be specific, I had 30, if I remember correctly, 35,000 shares assumed. Not a lot of money, right? Dollar-wise, but 35,000 shares assumed. When I sold it, I left 3,500 shares behind. Okay, so 3,500 shares at $4. It was trading at the time I left behind. Now, my goal on that 3,500 shares was to hold it longer term. Okay, that whether it ripped further, I wasn't going to sell it. If it gave back the gains, I wasn't going to sell it. I was going to hold through the peaks and valleys for down the line, if AI ever catches fire, right, and they come after it, I'll see a higher number. But look at what I had to, just if I was going to hold the whole position of 35,000 shares, hypothetically, right? You got to literally put a blindfold on, okay? It gave it all back, all right? So that ended up, I looked like a genius. Left some behind, probably should have got rid of that too, was the rationale, okay? Chop, 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 did a whole lot of nothing, retest the highs again, $5. Should I dump the 3,500 shares? I did not, right? Because I could have dumped it back here if I wanted to, okay? I held it, gave it all back again, all of it, okay? Looked like a horrible move. Now, months and months you're talking about. Look how difficult, right? So after that initial, it more than quintupled. Look at the price action after that, okay? Then, well, you had these mini rallies here, right? Little mini rallies, dead money. Then this happened. Ooh, but I don't want to show you that. I gave away the goose. What would you do here? Huh? Then this happened. Double, right? So from the $4 or $5 was the high. Now it trades to 10. You got to sell here now, right? I didn't sell it there either. Now, granted, okay, I made nice money with the trade. I left a trailer, so basically profits, right? It's a lot easier when you do that. But, I'm just saying the mentality that I had I'm willing to give up the short-term gains, right? Making a bet, a smaller bet, that one day they're going to come after this thing and be excited. The end result, not to drag this on, look at the top after that. Look at this. And then that move I sold into. Soon. Right? So, they don't always just go up and up and up and up, and you know where to get out exactly, and you end up getting out where it stops going up. That's chasing unicorns. You know what I mean? And then look at this. It gave back that too. Who knows? Maybe next year this thing's at $50 for all we know. But again, I think if you're trading a lot of these things, especially if you're trading a lot of them, you pick a few that you like, right? You make a nice hit, especially 4 times your money, for Christ's sake. Take a chunk off the table, leave a piece, right? You like it a little more than the rest, leave a larger piece. But the quote-unquote trade, you got to take. You have to take. Crazy, right? That's a move, and it was crazy. But can you imagine, like, if I had like a size position, like even the 35,000 shares that I had total, and I was trying to hold for like $20? You see the odds that you would have to go through. Now, it doesn't sound like a lot, but our average cost was what, like $1.60, Sahil, $1.70, $1.70 to 20. That's crazy. No matter how long it took. Right. That's the point I'm getting at, right? It's so much easier, just to Sahil's point, so much easier if you make money on a trade and you leave it's so much easier to hold through all this shit. So if you like a nuke name, like Sahil's been a big Oklo fan, you know what I mean? You're up big money, sell a chunk of it, leave a piece of Oklo, right? You have an Oklo spec name. You like Rocket Labs, right? Or ASTS, whatever's your favorite space name. You make a nice hit on it, leave a piece of it. You have a number in mind that eventually you want to see over time. And you contemplate at that point whether you want to cash in your chips or not. Maybe you never want to sell. Maybe you never want to sell. Depends, right? How the company, what happens over that time. But don't think like that. This like initial squeeze that's happening. It's possible, but it's extremely rare that the initial squeeze that you're a part of goes parabolic like GameStop. That's a rare thing. Right? That's like 1999-esque. Right? That was 2021. There's a lot of in between all that nobody talks about. They dream of the 2021. They dream of the 99. You may get lucky, but if you rely on luck in this game, it's gonna be a costly proposition. But to Sahil's point, you make money trading these things. You're taking advantage of the momentum, the flow, while they're hot, while people are chasing them before it becomes a frenzy, and then you're selling into the frenzy, leaving a runner. Things get a lot easier. I used to do that a lot more when I managed a book a lot more than I do now. I started doing more of it for myself. But I used to do it on almost everything. Oh, I almost knocked the plug out. I used to do it on almost everything I made money with. Leave some little piece at the least. But honestly, it only pays if you like the name. If you like the name longer term. Yeah, that's been another one, right? That's been another one. This one's lagged recently, but we made a lot of money with this name. A lot of us traded this name. But again, Patrick, and you know this, but I'm just reminding, when the momentum comes out of these things, okay, I'm talking about even temporary momentum, right? When they go through a period of a couple months where the momentum goes dry, especially if you're in options, it's like you lost all your money anyway, right? In options, when they go dead, you lose all your money. You have to sell. If you're trading options, you have to sell into the frenzy. You have to sell into the frenzy if you're trading options in these things. Otherwise, you'll never get out. Like, look here. Okay, this is where I traded EOSE. Most people in the room, I think, traded it here. But look like what you had to deal with, right? You had this, okay? If you didn't sell, or God forbid you're buying here, you got 3-4 months of this, okay? If you're in calls, good night. If you're in calls through this, good night. Fluff the pillow and good night. Okay? Same here. Right? If you're in calls of God forbid buying here, good night. This month, few months of pullback and consolidation. Yeah, girl trading, like, again, everybody's different. Like, I've even tried going that route, when they break a certain threshold. If you got multiple positions on, it gets a lot more difficult. You got to understand, especially trading options, even that much more difficult. You have to take advantage of the strength when it shows up. When you're trading these things, you have to utilize the strength to sell. Because when the reversals happen, not all the time, but most of the time, they happen quick. And what I've realized is that most of the time, best case scenario, if I waited for the momentum to die out and the reversals to show up, I'd get out where I was looking to get out originally. Best case scenario. Right? Again, we're talking about trades here, right? Runners you're leaving behind, or even just general investments. If you're buying, let's say EOSE, Pat really believes in the name longer term, okay? If he's putting that investment stamp on it, okay, he's got to come to the conclusion that no matter what it does in the short term, in the interim, he's not putting any weight into that. Okay, if I like EOSE based on future investment, okay, what it does over the next couple of weeks means nothing. Up, down, sideways, crooked, doesn't matter, right? Because I'm not looking to take that profit off the table anyway. Right? So before you put on a trade, if you come to the conclusion that this is something you're tucking away, right? And a lot of times for me, you ask the question, are you willing to add into any weakness? If the answer is yes, then a lot of times that's a name that you're willing to tuck away and sit through giving back profits and pain. But again, I know there are people that preach, sell when it breaks a 10-day moving average or 8-day moving, all that stuff. It's all easier said than done. You're not a program. You're not a machine. All right? You got an algo set up to do that for you, multiple positions, more to you. But to rely on yourself, all your emotions, all the psychology involved to do that, good luck. Honestly, there's no clear-cut answer, girl. I mean, it's a great question. There's no clear, it all depends on, before I'm even buying it, a lot of times what I'm looking for. Okay, I'll give you an example. Coming into the last couple of weeks, okay, as I mentioned to a lot of you guys, right, I was going to take a little more of a conservative approach on anything new I buy that I'm looking to sell early. Okay, what I'm kind of like almost a musical chairs approach. I'm looking to buy something, I catch some momentum, I sell into it, cash position, I see something else, a setup that I like, I buy that, right? That was kind of my approach the last week or two going into earnings season here. Okay, so like an Archer, okay, Joby broke out. Joby has been littered with buying, and we start to see some decent short-term Archer sweeper accumulation show up here. Right? Now, here's the difference, okay? Joby is already doing this, and Archer looks like this, catching action. All right? So my plan, no matter what I was going to play, my plan was anything I buy, if I catch the momentum Sooner the better, I'm selling into it. So I sold into it. Now, again, Archer is already higher than where I sold. Maybe up another buck and change tomorrow. But again, that wasn't my plan, wasn't to buy Archer at 10 and hold it to 20. You understand? Because we're a little later in the trend of the speculation, I'm just trying to take advantage of this extra momentum from this chase that's going on. Because what's going to happen is more than likely when sell programs find these names, okay, Joby is going to be down $3. And guess what? More than likely, Archer's going to be down with it, even though it's not as up as much. Because they're all trading correlated together right now. You understand? So I'm looking to take advantage of that momentum. Right now, it doesn't, on a short-term basis, it doesn't matter what Archer does or Joby does or who does it better or whatever the case. Right now, they're all correlated to each other. They're all moving together because it's like a frenzy right now. It's a chase. Right? So you're seeing like new names pop up like this here the last couple of days. LAC, or, you know, I mean, not to mention some of the other older crap names that are catching by. But, yeah, like this name has been a serious laggard. It hasn't moved up until this week. Right? So you have a better risk reward entry here. Right? Obviously, because LAC is not going to be down $2 like a Joby may be. That's already run like that. But when the momentum comes out of these things, this thing's going to run out of juice too. You know, it's just, again, the period we're in right now. Now, once we see Girl Trader, and I think this is what you're getting at, once we see that rinse reversal, that momentum gets sucked out of these things, that's when you start to look around again. You understand? Once these things pull back and the juice comes out of them, right? And now you're seeing more buying show up into that pullback, that's when you can revisit. And that's where some of the laggards you may want to give a longer leash to. But you got to get to that point first. Right? We're still in chase mode here. Retail, shorts, everyone's just throwing money into these things, call side. No rhyme or reason. Not because LAC's outlook is brighter yesterday or today than it was last month, because it's a speculative name and it hasn't moved yet. That's the only reason. Yes, the heel. I mean, that's where the money's to be made, I think, on an intermediate to longer term basis. Yeah. Because you could very easily see, we're already starting to see some of that. Like they from time to time they pick at those names. But it's something we should definitely keep a closer eye on through earnings season here. Yeah, well, that's not the worst idea. You buy a little, and if they come in, you can add, right? Just in case, because they're so out of favor, you're willing to take that chance, you know? Because the problem is, if they knock the cover off the bull earnings-wise, they're going to go. You know they're going to go, and then you won't be able to get them. GNW, that's another squeeze name, isn't it? Genworth Finance. Oh, this is a rate cut play, I think, Pat. Right? Isn't this a rate cut play? I think. Oh, no, insurance. GNW. I remember seeing flow in this name. You know, some of the other areas, like you got software and you got, some of the other areas of the market that, It doesn't look like it now because it's so hot. But if we ever get some like real rotation, and I'm not talking about rotation that's going to last forever, because I think the NASDAQ is going to have to borderline crash for a big rotation to happen, kind of a la 2000. But you get these periods for a couple months where you get outperformance from other parts outside of tech, right? They're a lot more rare, especially when you got something like AI going on. But, you know, there's a lot of money to be made off that rotation if we start to see signs of it. You know, we're already, even without the sell part of the rotation, we're already seeing signs of it, right? You're seeing sectors that really couldn't get out of their own way start to catch a nice bid. But, you know, that's something I think, again, these are the things, me personally, I'm keeping a closer eye on as we go through earnings season here. Not the stuff that's hot already, right? That stuff, don't get me wrong, I'm interested, but I got to see a rinse before I get interested in it again. You know, is if that money comes out of some of the hot stuff, where's it going to go? And, you know, there's a lot of places it could go. A lot of places. So you got earnings season, which makes it a little bit tricky. So, you know, you kind of want to be a little patient with it if you could. But to Sahil's point, like if you like, let's say like software, certain software names, I think you have to take the chance to buy a little before earnings if you like it enough, and then add if it sells off. And if they sell off, they're likely going to find buyers because nobody's in these things. Yeah, definitely, Pat. Definitely. You know, a lot of the stuff that we really don't want anything to do with for good reason. But again, I'm not saying AI and tech is done with a leadership role, right? Again, that's a hard call to make. But you certainly could see outperformance from other areas. You know, even the most bullish trends in things, they go through periods of cooling off. They always do. We saw it in the semis, for crying out loud. They were the hottest thing since sliced bread. Look, guys, right? Look. Right? And this is, you know, again, part of the reason why I sold half the Soxel. Now, again, Soxel can't go to new highs because percentage-wise, right, Soxel went from 16 to, again, rounded up, call it 30, right? That's a double. Well, Sox it trades with, right? So it did what Sox did 3 times that. You understand? Percentage-wise. That's what those things do. For Soxel to go to new highs after being beaten down in that correction from 8, you're talking about thousands of percent. You understand? You know, but I mean, this is a perfect point, right? Because of how bulled up, and you saw the chart. You saw the chart. That the one Sahil's talking about the software names. What do I do with it? Here, to the right. Okay. This peak here, see that big peak on the red line? That was into this. You couldn't find one bear in the semis. Not one bear. But if you were loaded semis up here, what happened to you? You got mangled. Right? Ultimately, you needed a full-fledged correction here, even after all this consolidation. That's how bulled up this thing was. I mean, listen, again, Soxel, I can't complain. You know, exactly what I was hoping it would do, and no complaints. You know, it's just the IWM. That's what I'm looking for. Like IWM, I'm looking for this here. All right, just like the Sox new highs, and then I'll consider taking chips off and moving around. You know, IWM at the least, I'm looking for new highs, and then I'll figure out what I'm going to do with my exposure there. You know, that's kind of what I'm playing, basically. I hope so, Pat. I hope so. But the truth of the matter is, too, and again, why I hold it, right? I ask myself the question, if there is a market pullback and IWM pulls back, right? If there's a pullback across the board, I want to add IWM exposure. You understand? I want to add small cap exposure into a pullback. Right? So that's kind of what it allows me to be more patient with it. Because I would add exposure into a pullback. Why do you use TD9 indicators? Honestly, the main reason I use them is it's a good reminder when things get a bit overextended to either side. You understand? Like a lot of times, like you'll see even the indexes, right? Okay. Now, again, some people look at certain oscillators or whatever, but a lot of times, especially in longer in a trend, longer in the tooth rallies, you get to an upside liner. It's a signal of exhaustion, potential exhaustion. So a lot of times you see the momentum start to wane, depending on positioning and sentiment and everything else. A lot of times I'll make the determination whether I want to get into cash or I want to raise some cash. Because when you have a market that's underexposed to, the upside liners just end up resulting in sideways action, just consolidation, right? No sellers. And that's bullish sign in itself. But if you're in a range-bound market, right? Like, look here. Okay, here's an uptrend. Upside, niner, little pullback. Upside, niner, little digestion. Upside, almost a niner, little pullback. Upside, niner, top. With basically everybody all in. Okay, so based on positioning and sentiment and everything else we look at, I don't know if you were around back then, but that was part of my reminder to be a lot more cautious and raise cash. Right? So no matter what the market did from this point on, even if it continued higher, I wasn't going to add risk. You understand? I was raising cash. And then this happened, and that's kind of a refresher. But yeah, you know, especially if you're trading tactically, I think they're worth paying attention to. You know, downside niners, a lot of times you'll see some support, you know, especially stronger names in a trend. But you know, a lot of retail, like with most of these indicators, they look for exact buy sell signals. I want to buy downside niner, I want to sell the upside niner. I want to buy, and you know, it's hard to find a lot of consistency doing that. All right, because you're picking and choosing which niner you're going to trade, which niner on which name, which instrument you're going to trade. You know, there's too much variance in. But I think it's just a great reminder of where you're at. It's like a reality check. You know, so like here you had a start of a correction, right? You had a drawdown, sold off a little past the niner, a little stability, boom, another one, downside niner again. That was the lows. So I would recommend you put them on a chart and don't use them as an actionable signal. Just, as you're looking at stuff you're trading, pay attention to how price action reacts and stuff like that. But that's how I use it. Obviously Tom DeMark, that's solely what he uses, right? He created the indicator. Or I should say it's a big portion of what he does. But great questions, guys. Anybody have any other questions before we wrap it up? Tomorrow's Friday OPEX. So it should get a little messy, that's for sure. But, we'll see. We'll see with these spec names. Can you do Zoom? Oh, Zoom, ZM. You know what's funny? I was looking to play Zoom, but what happened was, here's what happened. I'll tell you exactly. Right here, they bought Zoom. Okay? They did some buying. Short term. I think it was for next week. Okay? Now, again, as I refer to spot-wise, I like where it is. Okay? You got a potential downside niner setting up. Right? At the least, there should be some stability. This was a downside niner low. This was a downside niner, little stability and a squeeze. So for a trade, based off the short-term flow, I was looking to possibly buy it. But the very next day, they closed some of those calls. So they must have been playing for something. I don't know if there was earnings or something out there they were playing. But whatever catalyst it was, came and went. But again, spot-wise here, risk-reward-wise, I don't mind it. Like you could possibly see rotation into Zoom for a trade. You know what I mean? Again, I'm not talking about big picture Zoom. I have no idea where they stand. But on a risk-reward basis here, I don't mind it at all compared to the shit that's out there. That's what I actually like here. Again, earnings season gets tricky because you're going to have to battle earnings, right? Not just in the name you're trading, but could be somebody more important in the group reporting, right? That can weigh on things. So it's kind of a monkey wrench that enters the picture. But you got names like this that are interesting here, that could see some rotation. There's another one, Madden. I didn't talk about it yet, but there's another one I own a little bit of that looks interesting. Right? Again, momentum really hasn't found it yet. Came public. There was some Jan sweeper buying. That's why I bought it. Hasn't done anything since I bought it, but looks interesting here. Now, if they come in and sweep it again, I don't know when earnings are. That's the problem. But if there's aggressive action, depending on where earnings show up here, I got to find that out. If the flow comes in, I'm willing to add to this name. I like this name. I didn't see anything that caught my eye, but let me see. Hold on. There might have been some volume there. Let me see. You had a little bit of volume, mostly weeklies, little August, small. But the best looking action that I played off of were Jan calls. They were Jans with some time. But looks good. Some of these names that have been lagging, all like this Galaxy. I know a few of you like this name. I own some of this, right? You had a similar setup where you kind of went dead here. And now you're finding some momentum. So these are the names, again, personally, that I'm looking to trade. But, at the same time, I don't want to necessarily buy and hold every single one of them. Because let's say Bitcoin cools off, right? Let's say just Bitcoin needs to get hosed down for a week. Some of these names, even though they're laggards, they're probably going to be under some pressure. So that's kind of the problem. So you gotta find like Again, like software is an interesting spot. Under the hood growth names not tied to a particular momentum driver, spec driver. Yeah, that's the beauty of these things, is that they go dead, but when they heat up quick, right? They can put them up and put them down real quick. Wendy's, look at Patrick going. He's really digging here. Let's see Wendy's. Oh my God, what happened to Wendy's? Burgers no good? The price of meat probably, right? I don't know how the restaurant business ever functions. Yeah, this thing really got hit over the head. How's McDonald's looking? That got hit too, right? You know, again, you could rotation into a lot of these names. Yeah, Juan, that's I can't do it, you know? I'm not, you're not gonna get me to bless Lucid. There's no way. Lucid, Rivian, these type of names, forget it. I have no interest in, zero. And you know, it's a little stubborn of me because really, if you're trading, that shouldn't be the case with anything. But I just, you know, these names are literally dog poop. You know, literally. Yeah, again, the story is what buried people on these things. You know, they're all story. Like there's literally, and maybe I'm just not the right person to talk to. You got a lot of bag holders in this name, you know? Look at this thing. Like I remember people used to ask me about this name constantly, and I had to say Nicola. Remember Nicola? Oh my, I think it's gone, Nicola, now. Yeah, it's just you got a lot of sellers in it, right? You got a lot of sellers. Now you could get a short squeeze. It's possible. Right? You could get a healthy short squeeze. But I wouldn't chase strength ever in those things. You know, if I'm going to ever play them, I'd buy them when they're dead and then hope to get some strength to sell into. But personally, I would never chase strength in those type names. You know, one, I like the newer names, you know, like again, when Lucid in the COVID bull market, you know, Lucid, if you remember, it was a new name with that story. No sellers, had quite a few nice moves, you know, before the 2022 bear market. But, you know, now, my personal opinion, you want a new Lucid potentially, right? Something that doesn't have bag holders in. Yeah, I mean, Tesla, Tesla right now is just a cult stock on both sides. So nothing I can tell you about Tesla is going to really offer you much. Yeah. Yeah, but you guys know me. The noisier shit gets, the more I stay away from things. You know, Tesla is the exact opposite of what I'm looking for. If you were going to take the exact opposite, it literally would be Tesla. Literally. Right? Musk every day, every night. There's a headline. Oh, Musk said this, or Musk did that. Right? Perma bears in Tesla talking about the bear, the perma bulls in Tesla talking about the bright future. It's like a massive tug of war menagerie. Like, why do I want to hurt myself? I don't want the pain. I don't want the pain and frustration. Why? You know what I mean? Why? Like the drama, some people like it, right? Like you see on social media, like they talk about Epstein every 3 seconds, right? Like they like that shit. I don't like that shit. You know where I'm coming from? Yeah, I guess it's just constant, you know, it's the talk of the town. It's so much drama. So much drama. Like, you know, maybe it's at the point of my life now. I just stay away from drama. I don't want to buy stocks in the middle of drama. Ideally, and you guys know, those of you know me know this already, but ideally, I want nobody talking about the name that I'm in. Nobody. Nobody. Not bullish or bearish. Nobody. I don't even want a name that everyone's bearish on. I just want nobody. 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 Right? If you could find a sexy story, God forbid, that has real fundamentals, growth, nobody is talking about it. Right? Nobody knows it exists. That's the goods right there. That's the goods. I couldn't sleep some nights. Yeah, so I can't, I'm already burnt out. I'm already burnt out. I can't do that to myself. Yeah, but there are people in this game, they love the action. They love that. They love something that's in the news constantly, not something that's dormant. Most players in this game, like, look at Lucci, right? He's looking for where all the action is. He don't look for where the action is not, right? So he's doing the complete opposite. But I couldn't do what Lucci does for a second. You find me floating in the bay over here. I can't do that. You know so what? Yeah, that looked interesting, this NNE, right? We were talking about it earlier in the week. All these things, give Sahil credit. He's been counting this Oklo, a long time ago now. Long time ago. But even this SRM, which I played a few times, look at this. Wait, SRM? Not SRM. Is it SRM? What's the utility, Sahil, that we played a few times? That trades with Oklo, catches all that action. Oklo, and what was the other one with an S that they bombed? Yes, Sahil, I get it, man. I get it. Trust me. SMR. Thank you. Oh my God. How did I forget that? Oh, SMR. That's it. Jeez. Oh man. Yeah. So this is Oklo they've tattooed. They've tattooed. This Oklo, and Sahil will tell you this. You're talking about a stock. I remember literally like it was yesterday. It was catching sweeper activity. I never heard of it. GJT, which is our source for literally everything, equities, told us about what's his name, who was involved in the company. The guy from ChatGPT. Huh? It was a SPAC, right? I think it's still a SPAC, if I'm not mistaken. But anyway, that was here, guys. Altman, thank you. That was here. I don't think Altman's with the company anymore. Sam Altman. But that literally was all the way over here. See, now, again, it's easier said than done now, but God forbid, like, let's say you are aware of these things, right? Sam Altman's involved. It's tied to this nuke and power thing, right? Or you happen, God forbid, to be looking for a speculative name catching action. Again, then I didn't even know what it was, so nobody was talking about this thing. Maybe a few that were involved. That's the extent of it. But look at that entry. Yeah, SPACs. Honestly, I'll be dead honest with you. I hear the word SPAC and I kind of shy away from things. And it's cost me. It cost me with Oklo, MP. Honestly, I love the flow in MP and the setup in MP, but I couldn't get myself to build a position and sit in it because it was a SPAC. Not to say I would have been in it at this point anyhow. But just ever since 2021, what a sham, man. They buried a lot of people. They buried a lot of people. So, yeah, I just got a bad taste in my mouth. And I'll be dead straight with you. It's not like I got lumped up. I made a lot of money trading the SPACs in 2021. A lot of money. But obviously, a lot of people got buried. Buried. You know? And again, when social media, reputable people pumping SPACs on the daily, getting everybody to load up, right? Again, kind of resembles what we're seeing now in some of these spec names. Very similar, right? I think one of this guy, Clove, was it? I think Open was one too. Oh yeah, Clove. They must have reverse split this. Look at this. Look at this. Okay? Literally filing into it. Filing into it. Now, can you imagine all that retail following who literally was buying the living daylights out of this thing here? And look at it now. So it rubbed me the wrong way. But, you know, that was a huge bubble back then, that SPAC bubble. You know? Huge. Yeah, Clove, you remember it, right? You remember. TMC, that's another one, right? I had paper hands with this thing. I bought it and I sold it a day or two later and it just exploded. So I'm uneasy with these things. I'm uneasy with them. And you know what the problem is? Is like, you look at these names and, you know, you look at liquidity, right? You look at like where some of this stuff is. That's the reason these things are so big. Okay, back in 2022, these things couldn't catch a bid for the life of them as the Fed was tightening. When you lose that bullish liquidity backdrop, these things go bidless. All right. Right now, nobody's looking at fundamentals on any of these things. These things, they're not even reporting revenue. You know? So whenever kind of this liquidity backdrop, whenever it dries out, even for a period of time, you're going to see these things really drain. Yeah, I know, especially trading wise. I shouldn't have that PTSD problem, you know? But again, easier said than done. Yeah, you see it? I mean, look. Look. Like this started exploding literally before even equities and Bitcoin put in a low. You know, so this has been the green light on speculation, risk assets, crypto, everything. But this is getting a little interesting here now, right? Bio one, again, that's not really my cup of tea because I like playing equity on a lot of these things, and you don't want to play any equity size in biotech. You could get destroyed, you know? You walk in, you miss an FDA approval, and your $5 stock is at 50 cents. So that's something I stay away from. But again, you know, if you're playing calls, just the thing in biotech, you got to understand a lot of these, especially the sexy biotechs, IV is so junked up, you know, because they got a big catalyst coming. So they're tough. Biotechs are tough. You know, you can play the ETF, like XBI, if you want to use a little leverage and stuff like that. But, you know, there's a lot of risk. There's a lot of risk. Yeah, no, this M2 liquidity indicator, it looks ahead, right? So like I said, this turned before even equities and Bitcoin put in a low. You're starting to get a little bend here. So come, again, that notorious month, right? Mid-August, September, you know, this thing starts to leak out. And at least for the speculative stuff, it may pose a problem. But we'll see. We keep an eye on it, right? This is what we look at. So that's what I'm saying. There's no reason to try to predict. You kind of react to the signals as they go. And we take it from there. All right, guys. I'm going to go pop 2 Advil and take a nap. I appreciate everybody sticking around after the close, talking some shop. All right. Enjoy the rest of your rest of the week. Tomorrow, Friday, and a good weekend. And I'll see you, Steam Room members, mañana. Have a good night, everybody.